Okay, as we enter a whole new day in trade, let's take a look at the forces that are likely to impact our market today. US yesterday saw a sell-off post the rise we saw in futures on Sunday night. COVID-19 restrictions offset the optimism around a vaccine rollout. So the Dow closed lower by 185 points or 0.6%. The S&P 500 declined by 0.4% to 3,600, posting its first 4-day losing streak since the 21st of September. The Nasdaq was the only major benchmark to outperform, rising 0.5% to 12,440. Dow Futures gave us a glimmer of hope this morning. Currently, we're up around 70 points, but I think they might have tapered off slightly. S&P and Nasdaq futures were also pretty much flat. Now, stocks in Asia this morning on the back of a weakish global handover are also trading weak. So the Nikkei dipped 0.13% in early trade. The Topix dipped 0.15% in early trade. South Korea's Kospi shed 0.24% in early trade. Australia's S&P ASX 200 was down 0.46% in early trade. So in terms of data that we're looking out for from Asia, macroeconomic data, we have Chinese industrial production as well as Chinese retail sales for the month of November, which will be out later today. And obviously, we might see some reaction from the respective indices once this data is out. Coming down to Europe, yesterday, they closed higher. The Stoxx 600 was up over 0.4%. Banking stocks climbed 1.5% to lead the gains. Most of your sectors and major bourses remained in positive territory, except for the UK's FTSE index, however, which dipped 0.2%. So today, Europe might be a bit weak, given that we saw a run-up yesterday, and now that there's been a weak US market session. Asia's weak this morning. The SGX Nifty over here is showing a 50 to 60 point downside. Europe might be weak today as well when it opens up in trade. Let's do a check on two commodities as well, not just equities, oil and gold. So Brent crude futures rose 32 cents, that's for the month of February, and now are trading at around $50.29 per barrel. So firmly above 50. We touched 51 last week on Thursday, so we still have a little more ground to make up to get back there, but still holding firmly above 50. And US WTI crude futures for Jan were up 42 cents to $47 per barrel. So crude outlook looking pretty decent, and the prices have recovered a fair bit recently on the back of reopening, more travel expected, etc. Gold, which acts as a hedge to volatility in recent times, actually slid off yesterday. So spot gold was 0.6% lower at $1,827 per ounce. And then we had US gold futures settling down 0.6% to $1,832 per ounce. So gold still far away from its high of $2,000+. Looks like for now there's no appeal for this special haven metal that's taking it above 1900. So that was a global wrap this morning. SGX Nifty likely to open in the red and trade with a slight negative bias, given that we have no positive market action from anywhere on the globe to take us higher.